Alrighty, let's go ahead and get started. Welcome everyone to TradeFinder Live. Great to be back with you all during this trading day and during trading hours. First and foremost, we do have to cover our disclosure disclaimer agreement. The main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. This is always available on our website to be read in full detail at your leisure, or feel free to take a screenshot of it now if you like, but that's the main point to take away. Other than that, the market is reacting positively to the CPI report, and we still have the ongoing threats between Trump and Powell and the looming possible rate cuts and lawsuit over the HQ renovation costs. So lots to discuss there, and I'll leave the expert to elaborate on that. So let's go ahead and get right into it. Rob, you out there?
Hey, I'm Zach. Happy Tuesday afternoon to you. Welcome to Trade Finder Live, everyone. Welcome to you as well. We'll go ahead and get started. We'll not have the camera on today, so spare you that. We'll just be listening to the sound of my voice. That's what we're going to deal with today. But just to further what you mentioned, Zach, today was very highly watched on the CPI report. There's still an 87% chance that we're going to get a rate cut in September. I think that's a bit optimistic. I think it's more of a coin toss than an 87%. Usually on the Fed fund futures, when you get above 85, it's almost a certainty. I think a rate cut's far from certain. We still have the PPI report on Thursday, and then we still have the Jackson Hole Summit August 21st through the 23rd, I believe, is when that is. The Federal Reserve will be there. Certainly, Chairman Powell is going to be getting grilled on um, whether or not they intend to cut in September. As you mentioned, Zach, President Trump threatened significant legal action over the cost overruns of the new Fed headquarters renovations. So maybe he's trying to use that as leverage to get Powell to cut in September. I don't know. Um, I thought maybe that was the subject of the talks of their meeting before the July meeting when they met at the HQ, but wasn't. So let's take a look at the charts. And the market has been reacting favorably. We opened higher. We're a little bit higher than this at this point in time. I have, for those that haven't seen this, kind of redrawn this ascending pennant pattern, which I think is quite interesting. Um, we had the lines, I'll show you where they were. Over here was the pennant. And even when it was narrower, what I'm going to talk about in a second is that we were trending in the upper end of the pennant pattern ever since we broke above those 610 level highs, going back to the February highs in this area here. I actually thought we might test that level I'm calling it Non-Farm Friday, when we had the big down day on the much weaker than expected non-farm payrolls report, but we didn't. There was no follow through to the downward move, and back to the upside we went. So clearly, that was not a breakout of this original pennant pattern. It tells you very similar to sometimes a triangle forms, and it looks like it's pretty well formed, and then it actually morphs, I call it, into a little something flashback to your age, Zach, the Mighty Morphin Power Rangers. My goodness, did I watch that show enough when the kids were young. But with this movement here, we're in the lower end, the lower trend line. So we hugged the upper trend line, dropped down on the non-farm Friday, and now we've been trending up here. The bottom line, though, is that um, I thought we might test 610 first and then go up and hit that 650 level, which is what the AI has been showing. And just as a quick reminder for those of you that um, are new this week, and you can get a free copy of the software at hub.com, hubb.com. You get the free software, you get free Elliott Wave. There is an opportunity to subscribe to these AI signals if you want. You don't have to. You can get the software and the Elliott Wave for free, as I mentioned, but go to hub.com and get a copy of the software. you can see the AI is giving it a little bit more than a toss of a coin, 62% chance that we hit 652, and we seem to be proceeding along there. We do need to form a wave four at some point in time, and my only question was, do we hit 650 first, and then come down and form the wave four and test that line? Normally, when you break a major point of resistance, and the February highs, you can see was a major point of resistance. We got kicked back down during all the tariff tantrum stuff, and now we're proceeding back to the upside. Or did we come down, test that level, which also coincides with the 50-day moving average, and then break up to 650 or maybe even higher following that move? And I thought on Non-Farm Friday, perhaps that was the start of the test, but didn't happen. It was a one-day event to move to the lower end of this ascending pennant. So we just continue moving along there with the eventual target price likely to be that 650 level. The one thing that could have derailed that was today, much hotter than expected CPI. The headline number came in exactly as expected. The core PPI, which is where they kick out food and energy, and I used to in live seminars go into an hour-long dissertation about that and how ridiculous it is. The core, they kick out food and energy because those are viewed as being volatile. Well, isn't that what we're supposed to be measuring? It's not like consumers don't still have to pay the prices for increased food or energy, but they feel like those prices are too volatile. It used to be that um, I viewed that way, that they would kick those out to show that the numbers were better than expected for the Federal Reserve. And now they're looking at the headline number because energy costs were down, and that brought the overall headline number down. Food costs were flat, energy was down, and so we had a lower reading on the headline than the core. That's not usually how it plays out, um, but the core, um, taking the drop in energy out, was 1/10 hotter than expected um, on the month to month. So, or year to year, I think it was the month to month was in line, but the year over year was 1/10 higher, 3.1. 3.0 was expected. So basically an inline report is my long-winded explanation here. We look to the PPI. I don't think that's going to be as heavily watched now as it might have been had we had either a much softer CPI or a much hotter CPI. The fact that we are just kind of lukewarm, the market's just shaking that off and moving higher. Let's see what it did to the bond market here in just a moment. The Jackson Hole meeting, I think, is going to be the key now. I really don't think Thursday could put much of an effect in the markets with the CPI number already done. So let's go look at TLT on the 20-year. Remember, prices on the 20-year, prices and yields move inversely. So when prices move, yields are going the exact opposite way. So we're moving down in prices today, which means yields and rates are moving up. It's not necessarily a positive for the equities market going forward, but the market seems to be moving higher anyway. We did need a test of the point of this breakout. We came close to testing it here. And if I get the crosshairs here, that was on August 1st, and then kicking back around over to where we are now, which is down almost to the point of the triangle, which means we could add a breakout test. And now we find out, do we turn around with prices going up and yields and rates down, or do we continue lower and we get a false breakout from that initial move and yields and rates continue back to the upside? So that'll be watched very heavily. At least I do, because the bond market seems to be unsure of where things are going to go moving forward. And when the bond market is queasy, then the equities market should be. I don't know that this new breed of retail trader, and there is a whole, post-COVID, there's been a whole new influx of retail traders. Not sure they're as aware of the bond market as maybe they should be, and um, perhaps the bond market will prove its mettle at some point over the coming months. But you can see here rates started to tick back up on the TNX as well after a big drop on that non-farm Friday, where money clearly moved into the bond market, or was it that the bond market was already looking for a September rate cut? So the bond market's either 100% confused, or they're trying to say that there's likely to be one. But does this change that? This tick down on the TLT today. Um, so again, prices down, yields and rates up. Does that mean that the bond market feels that number was, even though in line, maybe just slightly too hot for the Fed to cut rates? Be really interesting to see how all that plays out. We take a look at the VIX, and we're still staying slightly elevated, and I call that, as long as we stay above 15, slightly elevated on volatility. We're getting towards the middle of August now, and we have not come down below 15 really to test that 12 and a half level as we did in December. And then, as I pointed out numerous times, where we spent the summer, complete summer last year, down there around 12 and a half. So slightly elevated volatility, still have some uncertainties, although less so on what all the tariff stuff is going to mean. Um, you saw the willingness to make deals where um, President Trump was adamant about Apple building their phones here in the US, and they had a meeting, and Apple committed an extra $100 billion to invest in US companies, and that was satisfactory to um, President Trump, and they can still make their iPhones in India, but yet the idea of tariffs is not only to balance trade, but to bring in revenues to the US to use in other aspects, however they see fit, basically. And I guess that was enough, because 100 billion, that's a lot of iPhone sales for a tariff. So I guess President Trump felt like that was a good enough trade-off. If we go take a look at the dollar, which is been really interesting. To me, it always is, but even more so over the last 6 months or so as we've stayed down in this range. This has been very helpful to the equities market, in my opinion. The Goldilocks area, I call this um, sideways trend channel that we have here, consolidation area, and we just stay here. This is the ideal place for equities markets to be able to continue to move higher. As I've noted before, really don't want to see the dollar fall apart. Then we start potentially opening up a whole huge can of worms as far as other countries that hold so much. Some of them have gotten rid of some of their holdings, no doubt, but um, a bunch of concerns about whether or not other countries will then start dumping dollars on top of it due to the fact that they're losing faith in it being the currency of last resort. But as long as we stay up here, that's fine. Stay in the lower end of the range is great for the currency exchange rate for companies with an international exposure. And we don't want to see the dollar take off and move back to the upside, because it has the adverse effect. And using Netflix as an example, Netflix did beat earnings on their earnings report, but they even admitted that if it hadn't been for the benefits from the currency exchange rate, they would on earnings. So that was a big deal for them. Let's jump right to cryptos, which are acting quite interestingly lately. This is BITB. You know, a lot of you like IBIT. Both of them very liquid on the whole option side of things. IBIT does have weekly options if you're interested in trading on the shorter term in the world of Bitcoin, but I like the ETFs that are optionable because that gives you a good leverage point to play in the crypto space with limited risk, which you do not have if you go buy partial coins outright. So I just personal opinion, think it's a better way if you're going to play in the bigger coins. Obviously, there's no ETFs for altcoins, etc. XRP has one now, but not across the board. And then Ethereum is really where the action has been, just powering higher here. A number of reasons why. This isn't a Bitcoin show or a crypto show, so we won't go any further into it, but um, certainly playing catch up after all that time that it spent lagging from the highs before the beginning of the year, post-election, all the way down to bottoming out during the tariff tantrum lows in April. Been a very interesting climb higher since then. We're almost moving into that old stair step pattern that you see, and that's when something goes vertical coming right out of this really small descending uh, ascending, I should say, triangle there. But a stair step pattern is when you go vertical and then you consolidate in a sideways manner right through there. And then you go vertical again and consolidate again. So it looks like you're going up a set of stairs, hence the name stair step pattern. So we're in another one of those vertical moves right through the highs that we have currently. How far Ethereum can go is anybody's guess. In my opinion, most people are watching to see if Bitcoin can break that 120,000 barrier. It touched it again yesterday, I believe, or maybe the day before, and then bounced back, but just a little bit, and a big move above 120,000 from what Zach and other crypto people that know more about it than I do are telling me there's a lot of short interest at 120,000, and if Bitcoin can break that 120,000 level, then there'll be a lot of short covering, and we could see a pretty significant rally. Likely we'll draw Ethereum with it, and maybe some of the other altcoins that y'all may be interested in. Let's take a look at the metals. We'll go look at gold, which can't figure out what it wants to do. It's been going back and forth with the tariff stuff as well. There was a report out on Friday that gold coming from Switzerland was going to have a tariff on it, and that put a little bit of a bid under gold due to the fact that it would restrict supply. If you're wondering, well, why would a tariff cause the price of gold to go up? And the reason is markets are supply and demand. In general terms, the markets are supply and demand driven by fear and greed. That's how you can summarize the markets in one short phrase. So if it slows the flow due to tariffs, then less supply, prices go higher. So we got a big bid in gold on Friday. Well, then President Trump came out yesterday and said, nope, no tariffs on gold. And right back down we came into the point of this triangle, hitting the 50-day moving average on the low today, at least so far. A lot of time between now and when the markets close. We'll see how that plays out. But um, there's going to be a significant move in gold very soon. And I can't tell you what direction it's going to be. There's no way to know. You look at the ADX, which is one of the indicators that I look at for when we might get a breakout, and this is highly unusual. We broke below 10. That's a very low reading on the ADX. We came up. Remember, the ADX measures strength of a trend. And when you have a low ADX, it means that it's trendless, which you could see in that symmetrical triangle. And we're just kind of hovering down here around this area, which is quite odd. It doesn't usually stay that low and go sideways. It can come low and even go a little bit lower, but I haven't seen the ADX go much lower than that many times ever in over 28 years. So it's a very low ADX, meaning that the breakout in gold is imminent. But I can't tell you what direction it's going to be. Nobody can, regardless of what people may tell you. The rules of triangles are you have to respect, especially when you have such a well-formed um, symmetrical triangle. Break could be either direction. And looking at silver, as we take a look there, no big triangle formation in SLV. They tend to move usually in similar fashions, but they don't always have the same pattern. And these aren't even close to being the same pattern. You could argue that, well, we went sideways for a long time, exactly where the AI called it, by the way. So the AI gave the signal that we're going higher on SLV back here on the 1st of June. We ran up. This was the target price, and we sat there for a month. Broke higher, came back, tested that and the 50-day moving average, started to move higher, then drifted down again yesterday on the heels of gold, I believe. It was just traveling behind gold and trying to figure out where we want to go. If we are moving up into that wave five, it creates a pretty symmetrical Elliott wave pattern, which is why I have those lines drawn there. I like symmetry in the patterns, whether it's a five wave Elliott wave pattern, whether it's the triangles, whether it's a zigzag, whatever you're looking for. Been my experience that when there's good symmetry to the pattern, not like the labeling's all over the place, those patterns tend to have a higher percentage chance even than LA wave does in general of occurring. So maybe a slight nod to the upside on SLV. We held the 50-day moving average. We held the 38.2% fib retracement level, and we tested that area where we went sideways, which provided really good support from the month of June basically into mid-July. So we'll see if that continues back to the upside. Also moving into energy, and you can see that another tick down in UNG. It doesn't seem that anything wants to give a break to natural gas. And I was talking about this yesterday in our EWO live show for alert subscribers at ewotrader.com that we're just flush with supply. It's not that there's not a demand for natural gas. We know there is. We know the seasonality is in favor of it. We're moving in towards the winter time when typically more natural gas is used. We have the data centers being built that are going to be using natural gas, but we have a lot of it and exploring more all the time. So right now, supply is outpacing demand. No matter how great the demand is, that may change at some point once these data centers get built and we know exactly how much natural gas they're going to need and use. Maybe that's the point that we start to get a bid under UNG. Or maybe it's just from a technical standpoint, because right now you can see on today's low, we're right smack in the middle of the tap box. And that stands for time and price projection, both time and price forecast in these tap boxes. And we're right at the midpoint of it. We're nearing a 100% extension here on natural gas following a almost perfect 61.8% B wave correction. So once again, pretty good symmetry in this pattern as well on a five wave pattern. And maybe this is it. Maybe the wave five extending 100% is where this pattern ends. And it's a technical bounce that we get rather than something based on fundamentals like weather and supply and all those things, that it just becomes we get to the point where the selling is done. People that wanted to sell natural gas are done. I feel like there's a lot of shorting in natural gas right now. And once we do get any sort of meaningful bounce, there'll be some short covering, and that could drive natural gas all the way back to the previous four, which, unless we go much lower, is what you would expect. But if that wave five extends more than 100%, remember you don't look for a retracement back to the previous four. You only look for a bounce up towards the 61.8% retracement level. We'll give natural gas another day or two and see what happens there if there's any further downside to go. Oil, pretty much, I'm feeling like I've been pretty spot on with oil at the beginning of the year. Felt like we'd stay in this big trading range for the majority of the year. We're nearing the middle of August, and so far we have. And 75 is, I think OPEC has defined that as the sweet spot. And they want to see oil stay in this area. They want it to be elevated in price, but not so high that it drives people towards electric vehicles. That's the whole supply demand thing again. So they want to make as much money as they can, keep the price elevated, but don't scare people away from combustion engines and move over into electric vehicles. That's what they want to avoid. Look at the other markets, the Dow, right in the middle of a pretty nicely formed triangle here as well. It's not huge, but it is decently formed. So some sort of a breakout likely to occur in the Dow. The one market, well, we'll look at the IWM as well, but a market that has not taken out its February highs yet. All we did was test those, barely broke it, but pretty much just tested the February highs, and then we've consolidated since then. So we've pretty much been consolidating since this catch-up run that it played here in July up to those February highs, and then when just sitting here waiting, something's going to happen on the Dow as well. So completely different patterns between the S&P and the Dow at the moment. If we take a look at the Qs, we've still got those same 10 stocks that are driving the majority of the market. That frustrates a lot of old timers, but that's what I've mentioned this, opined on this a few times. Don't want to spend a whole lot of time on it, but with the amount of money that the retail trader has on the sidelines, a very unusual instance where the retail trader actually has a little more buying power than normal. Normally, the institutions that control everything, and the retail traders are the last to the party, the FOMO, if you will. And as the institutions see the retail traders piling in, they let it run a little bit, and then they start getting out. They start taking profits and let the retail trader hold the bag. That's typically how things work. But will it play out that way this time with the amount of money in money market accounts that the retail public and again, a whole new breed of people coming into equities markets? It's going to be really interesting to watch that and see if some of the old adages hold true. But we're just powering up in this tight up trend line here, and it's not that vertical. It's kind of in that 45 degrees. If we had a protractor, maybe it'd be slightly higher than 45 degrees, but not much. And those are the patterns that I like in a trend. They tend to hold, and the corrections tend to be less severe. So when I'm talking about a wave four being formed, I'm in no way talking about any sort of a market crash type scenario. The macros from the folks at Hub, the same data scientists that create the AI signals, are still bullish. The expansion is still in control. And if we do get a rate cut, that would just be fuel on the fire for a continued move higher. That might actually give us a spike higher. And maybe that's to the point where we get a little bit of a blow off top scenario and we get a bit of a correction. But it's going to take something along those lines, I think, to get us there. But right now, just nice, well-formed upward movement and relatively tight trend. Interesting to see something stay in such a tight trading range this long. You can stay in trading ranges for quite some time, but normally it's a bit wider. There's a little more volatility back and forth, but not on the Qs. It's just like up we go. And that's where we've been. Looking at the IWM, we did break back above 220. You can see a nice move today. So very weird that with rates moving up, the small caps are moving up. That's unusual. The IWM, as we've talked about numerous times in the past, probably the most susceptible market of all to interest rates. So you wouldn't think that we'd be getting an up day on the IWM with rates ticking a bit higher, but yet we are. And now the only question in my mind is, do we hit 230 this time? I thought we would back here in June. After we broke above 220, I thought 230 was next. We gave it a look in early July, came back, gave it another look towards the end of July, and then fell back down. There's non-farm Friday with the move down to the 50-day moving average, and then that was it. No follow through, right back to the upside, back to the 10-day moving average on Friday and Monday, and then breaking higher today. Could that be a little bit of market rotation, broadening out of the rally other than just the 10 stocks? That would be very positive for the markets if the IWM can continue this run. We'll just have to wait and see now. I think, we got about 10 days of the market left to its own devices now, unless something is brought out We already know there were two Fed governors, first time since 1993, that dissented on the vote for no rate cut in July. But it's going to take a lot more than that to override Chairman Powell and get that rate cut in September. But perhaps in some Fed speak, we start to hear more governors say they're in favor of a rate cut in September. And then you start putting the numbers together on the voting members of the FOMC, and you can kind of figure out where things may go. But that, to me, is the story of the day. Um, the fact that with a just tiny bit um, above expectations CPI, that rates moving to the upside and the IWM moving up as well. Very odd. Didn't do a market update this week due to unforeseen circumstances. So we will go to a quick run around the world here, and then we'll open it up to questions. So we're going to take a look at the EWA, and that here is Australia, and we're almost there. If you've been watching for a while, you know I've been talking about this level of 27 for quite some time, and it's like the IWM going to 230. We keep moving up, moving up, moving up. And once we got above 26, I thought 27 would be the likely next stop. And even though it shows 26.95 over here at the moment, because that 5 was labeled, you know that we did take out that wave 3 high. So we finally got there to 27. Now, can we break that? Or is this going to be a double top scenario? That'll be what we're watching for in the next trading day in the land down under. And then taking a look at Canada, the one that hasn't seemed to be so cooperative in having tariff talks, but yet their market is just ignoring all that and continuing to move to the upside. Nice. There's that 45-degree move up there, a little bit of a retracement there into the on-farm Friday. Set the wave 4, but only at the 23.6% of fib level. And even though Elliott acknowledged that that's a fib level and it could act as a support or resistance area, as far as an overall pattern, whether it be a zigzag or a 5-wave pattern, he didn't really like to count that as a corrective move. He didn't think it was enough to actually count as a actual correction. So we hit that level, happened to coincide with a 50-day moving average. Great place for the EWC to bounce if it was going to. If it wasn't, we're probably coming down here to 42 and a half, but it didn't. It did bounce. We made a new high. We're testing that high right now. Can the EWC hold here and continue up? So if you're interested in trading the market, I know we have subscribers from Canada. If you can hold this level right here, you might have something really going up there in the land up north. So we'll watch that over the next couple of days and see if we get some sort of a break move to the upside. And then over in Germany, where once the ECB rested, as you know, kind of took a little bit of a toll on the big rally that the EWG had. And I've talked about this numerous times, so I don't want to repeat everything. I know we have new people all the time, so that is why I repeat myself. If you watch a lot and you're like, you said it's the same thing all the time, well, it's because we have new people all the time that haven't heard it. I know you guys have heard it a bunch of times, but not everybody has. And we look at this, we had this big rally here in this wave 5 pattern on not good fundamentals. The economic data out of Germany has been uh, pretty poor, honestly, but markets love rate cuts. They love lower rates. They love easy money coming in. And it's like fundamentals be damned, we're going higher. Tends to be how the markets view things. Well, once the ECB rested, that was the end of the rally. And you could say that it's been actually pretty commendable that we haven't had more of a correction out of the EWG once they stopped. Because from a fundamental standpoint, from an economic data standpoint, it didn't warrant this rally. So you thought maybe it would give some of it back, but it hasn't up to this point. We're sitting here testing that wave 5. This could count as a third test here. My mentor when I was first starting to trade had an expression, third time's the charm. And that was just one of his trading rules. I share mine with you all the time. But one of his was if you test a point of support, resistance, major moving average, whatever, the third time you test it, whatever happens on that third test is what's going to likely happen over the near to intermediate term. And that means that if we broke above that resistance level, then we're probably continuing higher for a while. If we don't, then we're probably going to start to pull back. So if you're interested in trading the EWG, you want to see this turn and burn really quick and get back above that level at 42 and a half. If it doesn't, then I think we do expect a little more of a downward movement here. Once again, the wave 5 went beyond 100%, so we'll be looking at these fib levels over here as places for the correction to fall. So another day or two where we haven't sprinted back higher probably means more downside to come on the EWG. And then we take a look at the Nifty in India, and maybe got a little bit of a boost, you would think, from the fact that Apple can stay there and manufacture their phones there. A little bit of a bounce off of the wave 4 right here at 50% on the corrective move. Good place to find a bounce. It's the only thing that's there because as far as support levels, really not much there off of this. This is more like what an uptrend looks like rather than that narrow one that's on the Qs. That's kind of what a trend looks like usually. We broke out of it, came down, broke the 50-day moving average, went sideways, held this area right here to 50% correction, trying to bounce above it, above the 10-day moving average. Perhaps we're at the start of a wave 5 to the upside here. If you're really aggressive and we get another day above the 10-day moving average, you could go long the Nifty or the INDA, whatever your favorite vehicle is for trading the market in India. A little more conservative play would be to wait until we get above the 50-day moving average. It's not that far away, plenty of room to move higher after we're breaking the 50-day moving average. So as you know, I usually like to give when the opportunity is there. It's not always there, but both an aggressive and a more conservative play. We all have different risk tolerances. You know what yours are. Trade with what you're comfortable with. Otherwise, you'll drive yourself insane in the world of trading. Too stressful that way. Just trade within, stay in your lane, basically, to use a common cliche in this day and age. And I do want to take a look at the FXI for China. Let's see what's going on there with the fact that President Trump extended the deadline again. So I'm going to go ahead and take all this stuff off. This was when we had a FXI trade. That was the terminology that I posted on the chart. We nailed it. We exited exactly at the high. That was it. Just couldn't have been a better exit on that position to the upside. And then we've come back down. It was right where that previous high was going back into March. And then we still have the wave 4 green. So the way the hub software works is if it's labeled green, the algorithm, and sometimes you guys will post things, especially on the US market updates, that you don't agree with where I put my Elliott wave labeling. And I just want to highlight they're not my Elliott wave labels. It's the algorithm doing it. All I'm doing is just trying to interpret the charts for you the best I can the way I see them, but I'm not the one labeling them. The algorithm is, and it's programmed as to the algorithm that Ralph Nelson Elliott wrote. And one of the features is that if the algorithm is not sure this wave 4 is done, it colors it green. It means it's still active. When it turns purple like that, and by the way, you can change the colors on it. If you don't like purple and green, you can find something else. But for those colors, the green means that it's still active. Purple means that it's likely complete, that wave. Now we're trying to break below this 50-day moving average. We tried to on non-farm Friday. We didn't, broke back above it. And now we're having another move up today, which I think makes sense based on that news today. The question will be, can we break above this? If we can get any follow through, one more day, a follow through here with this break from 37 higher, then The next stop is likely here. And then can we break this resistance and take off in a wave five? I could see that scenario playing out. So right now, there's really not much in the way of it moving from where we are here up to that resistance level. So we'll see if we can break above it. But I think that's a pretty good bet, if you will, right there, that we do go up and test that level. But don't jump in right now. Wait and see what tomorrow brings, and if it appears that we're getting follow through. One day doesn't mean anything. You have to have a second day follow through or confirmation day. All right, Zach, we'll go ahead and answer some questions. I went a little bit longer on that, but we hadn't gone around the globe in a while, so I thought it would be good to update what's happening everywhere else. So let's get to some questions before we come back with today's case study consideration.
Absolutely. Sounds great, Rob. Let's get right into it. Got a question here from Raphael on ZG.
BG. Zillow. That'll be interesting to see. I haven't looked at Zillow in a while. Um, Everybody knows what that is. The AI back here. Um, and it shows you the power of it, I think. It was only a 61% chance here back when it identified this move up for it to continue up to its target price, and it did. So imagine when you get 75, which is what we like to look at. I'm good at 70 because I have confidence in it, but 75 or higher obviously a really good chance that target price is going to be hit. That's the value of the AI signals. But we got there. We've backed off a little bit. We're below the 10-day moving average. That could act as a pretty good point of resistance. So I'd be a little cautious on Zillow at this point in time. If you were looking at it as a short, I wouldn't be too excited about that either because the 50-day moving average could act as support and it's not that far below. Maybe a couple points could be a very aggressive downside trade. But at this point, you would not want to go long until we get back above that 10-day moving average and then look like we're starting to get some follow through. If we do that, then it could go higher. And again, the wave three is still active. So it doesn't mean that that was the end of the wave three. Just got a little bit overextended, a little too far from the 10-day moving average, the rules I talk about all the time. And we set back down. But if you're wanting to go long this, just be patient, let it get back above that 10-day moving average. There'll be plenty of time to catch an upward move. We don't need to catch the exact bottoms and tops. We do better when we look to take a piece out of the middle because nobody can consistently call entries and exits at the bottom and the top. It's fun when we do. It's fun when we get that last tick on the low side or the highest tick on the upside. And I'm guilty of it too. I just talked to you about it on FXI. It's fun when we do, but we don't expect to do that. And we are far more successful when we just take our piece out of the middle of the move. So patience is key. It's the one word that I feel is the most important in the world of trading. And we're not, are we? We're anxious. We got money at risk. We want things to move our way now. And the markets don't always work that way. All right, off my soapbox. Let's go on.
Well said there, Rob. Sean would like you to look at INTC.
Intel. Yeah, boy, that CEO's had a week, hasn't he? First of all, President Trump's calling for him to resign, and then he comes out and says, "Oh, he's doing a great job." But in fairness, there was some speculation on his ties to China and what kind of information might he be sharing with China, etc. He had a meeting with President Trump, and I guess President Trump now feels confident that his focus is here in the U.S. and that there isn't, I don't want to say trade secrets, but data information being shared with China. And so that put a boost under the stock, as you can see. And if we can finish higher today, that would count as a follow through day above that 50-day moving average. And then I think we're at least going right back to the top part of this triangle here. I know it's not that far away, but Intel doesn't move a tremendous amount anyway. But yeah, I think there's a pretty decent chance that we head back up there. Let's see where we close today. But I like that, and it may have some tailwinds on both um, getting past this concern that's been out there for a while with their CEO, on top of Intel's been lagging, and at some point, um, the institutional money, at least, maybe not retail money, but institutional money is going to look to rotate. Where are the stocks in the hot sectors that have been underperforming? And that's where money is going to go. And Intel is obviously a very strong company, and I don't think they're going to be left behind for long. And that could put a bid there. Break above 23 would be really interesting, I think, because then you're going above 25 if that happens. So I think you got a good one to watch there. I'd keep an eye on it. I just would encourage you, let's wait and let it close today and see where it goes.
Thanks, Rob. Question from Lori. We've broken above 200 on Goog, Goog. What's next?
Let's take a look. My favorite stock to trade alleyway on. Um, Probably heard that before. I may have mentioned it a time or two. Zach, what do you think? Um,
A couple
and
times.
yeah, going back here, there was the AI trade on it, and you can see that was the commentary I put on the chart when we closed it out because it hit the target. And at that point in time, this is where the price was on the upper arrow. That's where the 10-day moving average was on the lower arrow, and it's caught up and is continuing to power higher. So now we're looking at, from a zigzag standpoint, moving to the 138.2% fib extension level, which is right over here. And that one holds sometimes, not a whole lot, but holds sometimes. But 161.8 is a far stronger level. And perhaps without the market rolling over, which it doesn't appear it's going to do today, there was danger of that on a real hot CPI number. Um, that that's probably where we're going on Google. It didn't even seem to blink at 200. It just went right up there, and we're continuing to power higher. You could argue that on the high, we might be just a tiny bit overbought from the 10-day moving average. So you might want to give it a day or two and see if it has a consolidation day, kind of like yesterday. Go sideways a little bit, take a little of that volatility out, and then go long. But if you're long now, I would not get out. There's no reason to get out, and understand that you could have a little bit of backing and filling over the next couple of days, but this one looks really strong. And when you see that, I obviously want to bring in the DMI, my favorite confirming indicator, and that looks great too. So it does look like Google wants to go higher. Um, just don't know if you want to get in right now. Maybe get a better entry tomorrow. Now, the other side of that is, just because we're a tiny bit, and it isn't significant, by the way, overbought, we can stay overbought and oversold for short periods of time, just never for long periods of time. It just doesn't work. The separation from the 10-day moving average doesn't happen for very long. But could it go vertically again tomorrow? Yeah, it could. So take that into account. And if you're trading options, a way to say, I don't want to risk another vertical day tomorrow that I miss, because that 161.8% level is not that far away. But understanding it could back up a little bit, that's the time when a call spread might make sense. That if you do get a little bit of backing, then you have that short call in the spread. And if it pulls back a bit and then starts to turn, then you buy the short call back. But at least you're still bullish on the position and still profiting on the move to the upside. It's a good hedge for a scenario like this. Thanks for bringing that up for multiple reasons.
Absolutely. Next up, we have Philip, Joby, please, and its competition. I'll give you that symbol after.
Okay. Yeah. Reason I laugh is this stock reminds me of 1999. Party like it's 1999, as Prince would say. They don't make any money, and yet they've got a pretty strong valuation. Blew everybody away, and so we're up here. It's a favorite of the meme crowd. I know that, and we're trading above the 10-day moving average. You can't ignore that this is a pretty solid consolidation. When it started to go vertical like that, it's like, can't chase that. I think we may have looked at it when it did that. And it also went exactly to its fib level, by the way. Another nod to the zigzag pattern. Right there to 38.2% B wave correction is going to yield a 61.8% extension. It's exactly where it went, and then it backed off. Now, if a C wave is over, you usually retrace the entire C wave, which would mean a little bit lower. We come back down to the point of the B. But if the C wave is not over and we're just correcting this overbought condition where we went a little too vertical, you could argue that because we've consolidated nicely and we're back above the 10-day moving average. This isn't my cup of tea to trade, but for those that like this, I would watch the close today on this very closely as well. And barring some sort of a significant sell-off tomorrow, which I don't think is going to happen, but if it did, then you would know where to look. It would be this B to see if it finds support there. But if it can continue to close higher here and looks like it's opening higher tomorrow, then you may be on an extension run up to the 100% extension there. That could very well happen. That would be the next target price for me if we hold here and continue higher.
The follow up there is its competition ACHR.
Yeah, there's a lot of interest in these stocks right now. But as you can see, it seems as though the meme crowd prefers Joby, but this isn't horrible right here, but it held the low of the day so far. It needs to hold that significantly. We're just above a 61.8% fib corrective level, and we've got all of this congestion right through there, which is where we're trading. We want to get it back above that. If you want to trade this one, I would say let it get back above that 50-day moving average because this is a danger area. It could just be testing all this to see if that's now resistance. And if it is, it could turn over and roll over and head back down. And then you're looking at testing these lows back here from April. That's still a possibility. So you wouldn't want, well, it's up to you, but the more conservative approach to this would be let it get back above the 50-day moving average, see if it's given a little bit of follow through. And if it is, probably going up to that wave 5 target, but it's in a little bit of a danger zone where it is right now.
All righty. Thanks, Rob. Next up, we are going to move on to, excuse me,
I don't know what
Tesla.
that symbol is, Zach.
You haven't heard of that one?
No.
The old clear up the throat. Tesla.
Wow, I'm glad this was asked about because talk about a great looking triangle. My goodness, you'd be hard pressed. I talked about this yesterday that this would probably be in a textbook somewhere as far as what a symmetrical triangle looks like. Extremely well formed. We had a nice breakout Friday, followed it through a bit yesterday, resting a little today. This one's pretty easy. If you're long Tesla, you stay long right now. If you're looking for an entry, I would say let's let it get back above the 350 level first because it's likely run into 400 if it does that, which is also where it should go, somewhere in that area from the width of this triangle. The mouth of the triangle is what you use to gauge how far a stock breaks out of a triangle. And then you got the big round number, the tractor beam effect at 400. But we're so close right here. Let's just be a little careful, make sure it's not a false breakout. It did have confirmation yesterday. Would have liked to have seen it close a little more towards the high, but still does count as a confirmation day. So rest today is actually what you would want if you are long and you're watching the breakout. You don't want it to break out and go vertical because then the correction will be more significant. So consolidating under a point of resistance is exactly what you want. So again, if you're long, good price action right now. If you're looking to get in, just be a little more patient. Let it get above 350 first, and then you probably got a nice run up to 400.
Thanks, Rob. I see we're coming up close to time, so I'll pass through maybe one more symbol and then we can go on to the case study consideration.
Yeah, sounds good.
All right, we'll wrap this up with Oracle.
Oracle. And people still care about Oracle? That's amazing. Um, I'm just kidding. We're getting into old school tech now, although lots of respect for Oracle. Um, really solid company. Larry Ellison does an amazing job. Looking at the chart, looks pretty solid. There's that nice 45-degree rise, sideways consolidation. That's usually what happens following a 45-degree ascent. You don't have the big spikes back down on the corrective move. And let's see if there's, you would expect with a little bit of this slowdown in the ascent that the ADX would come down a bit. You can see it's trying to level off a little bit. What would be concerning is if that ADX continues and breaks down below 40. So this move up on the positive directional indicator is good. Um, when you look here, this movement up towards the ADX is positive, moving to the downside. And if you start to break down below here, that means that's the end of the wave three. So this is a little bit of danger set up right here on the move from the level at the wave three right at 250. It looks okay with a nice consolidation, and it does look like the ADX is trying to round out a little bit. So if we go sideways, then perhaps we hold here and turn and move back to the upside. And if we don't, then that means the wave three is over. So a little bit of just wait and see. Sit on your hands a little bit here for Oracle at this moment. All right, I want to share something with you here, so I'm going to stop sharing my screen for a minute, and I'll be right back, and then we'll get to the case study consideration for today. And we'll bring it back.
Standing by.
Standing by, we're coming. All right. Saw there's a comment. I know who it's from. We talk about this all the time, argue about gaps. And I can tell you, I've been training for 28 years. The majority of gaps get filled. It's true data. I've never said all gaps get filled, and I've never said we know when they get filled. The majority of gaps get filled. It's a very high percentage. It is not 100. If you go ask AI, do gaps get filled? You'll find all this. While a high percentage of gaps do get filled, not all of them do, and the timing can vary. And that's all I've ever said. And that's from AI. Some traders use gap filling as a trading strategy, anticipating that the gap will eventually be filled and looking to profit from that anticipated price movement. And there's a number of factors that go through. And create the filling of the gap. Over time, the market tends to readjust and bring the price back to a more realistic level, possibly filling the gap. So you can have a difference of opinion. You don't have to keep poo-pooing the fact that I say gaps get filled. This is just a ridiculous argument. You have a difference of opinion. I love differences of opinions. Just um, that's mine, and I'm sharing my opinion with you from my experience, and it's as simple as that. And so we don't need to go any further into it than that. So Let me go ahead and get the chart of the market back up. And then we will look at the case study for today. This is going to be another post, Zach, not an idea. And it's going to be on Netflix. I do feel that Netflix is going to resume its move. Now, you can look and see here, and if you follow me for a while, you know that I don't look at the DMI on downward moves anywhere near the way I look at it for upward moves. And the reason is the DMI is a lagging indicator, and downward moves can happen so fast. By the time the DMI catches up, the downward move's over. So it doesn't really. Uh, oh, are you not seeing the screen? Oh, I got to change it. The screens, I forgot them on the laptop. So, um, is that it now, Zach?
Yep, we got you.
Okay. So here's Netflix, and what I was showing was the DMI and the fact that I don't look at it. You can see the ADX is moving down. It's a mess when you're looking at it for downward moves. So the fact that it was a downward move, you take that off. Netflix is the company that I mentioned that they beat earnings, but it wasn't as exciting because they even admitted that they beat earnings due to the fact that they had favorable currency exchange rates, and that's why they did. Would want to watch and see if it closes on this doji today that is forming now. That would be a moment of pause because we had kind of a quasi doji yesterday. That'd be back to back. That would make me a little bit nervous, but it also could mean that it's getting ready to sprint higher. But you can see that we are about to get a 1030 cross here. So this is one that doesn't follow any of the specific rules, so it can't be an actual idea. But it's one that I think it's highly likely that we're going back up to at least this 1275 level. So I think Netflix from here up to 1275, and then we'll readjust and see what happens, especially now that we've made it past that CPI report. Now, whether it goes on to make a new high, who knows? The wave 4 is labeled as blue, so it does feel, the algorithm does feel that wave 4 is complete. So that's one little nod there. It would be nice to see that 10-day follow on through and break above that 30-day. Then I'd feel better about that. So um, just kind of a thought there. And that's for this week. We've done a few posts here lately, Zach, and kind of took your thunder away for the explanation, but we'll let you go through your eloquent explanation next time we have an idea. Maybe that'll be next week. We'll have one. So, um, anything else, Zach? Otherwise, we'll send people on to their trading day and we'll see where things close.
Yeah, no, as always, we've got plenty of outstanding questions, well thought out questions, but you've been generous enough to give us over an hour of your time, and everyone, I think, is aware that you're still on the mend, healing up. So I think we'll let you and everyone else, including myself, get back to the markets, and we look forward to seeing you all for the next webinar. So thank you for joining us today, and I'll pass back over to you, Rob, for final thoughts.
All right, sounds good. And um, remember, watch where the close is today, and then I think we have a void between now and the Jackson Hole. That could change everything. Depending if Powell maintains that hawkish stance, the market might get a little tired. We're probably going to be at 650 by then on the SPY. If all things stay the same. So it could be a right point for a rollover, or if he does sound a little more dovish and hint at, September may be on the table, then boom, we could see a vertical move. And after that vertical move, maybe we're due for a bit of a pause. So maybe a little less volatility over the next week, and then we'll see. But it's going to be one of those things during Jackson Hole, and I can tell you this next week. I don't need to go into it further here because we are over time. But it's going to be one of those meetings where everything Powell says moves the market because everybody's trying to figure out, is September happening or not? And so people are going to interpret every comment that he makes. And it's kind of fun to watch the intraday movements of the market during those kind of things. But that's likely what's going to happen. All right. So thanks for your attention as always. Value your time. No time's the most valuable asset that we all have. And so appreciate you spending some of your trading day with us. As Zach mentioned, man, I love this show. It's my favorite one because the stocks that you guys come up with, the questions that you ask, it's a lot of fun to do this. So look forward to TradeFinder each and every week. If you know anybody else that you think might be interested in it, get them to join along. You guys are an amazing community. So have a great rest of your trading day. Look forward to talking again soon. Take care, everybody.